the time of crazy volatility, and today it's probably the most dangerous threat to the stock market. Apple's capitalization is over $2 trillion, but they think it's far beyond the limit. When the S&P 500 index hits a new high, the price keeps growing. Welcome to the Coin Post. Let's have the courage and face the facts. The S&P 500 index rose to a new high. It means that we've seen the shortest bear stock market in history, and we will see a 50% or more growth in the future. Or no, do you think I'm aiming too high? And while you're writing in the comments about the second wave of the stock market crash, I'm gonna tell you that today I decided to go through a video of Graham Stefan, who is 30 years old, he's a millionaire, and in many ways, thanks to YouTube. Graham has more than 2 million subscribers on his channel, but the main thing is that it's about investment, stock market, and financial independence. And it's Graham Stefan, not me, who thinks that you can make about 50% on it if you buy the stock today. I'm offering my review of his views on investment in 2020. We start right after you subscribe to the channel and turn on the notifications so I can make even more useful content. Let's begin! We start by analyzing the stock market. The S&P 500 index hit a new high of 3,386 points, which was set in February this year. Thus, if we rely solely on the facts, it's the bullish market. And if you look at the history of changing upward and downward trends in the stock market, the bear market lasts for about 1.4 years, and the bullish one will normally last over 9 years. Graham points out that we're facing the shortest S&P 500 bear market in history, as it lasted less than a month. There were other 20% falls in history and more, and they also lasted a relatively short time, but such a rapid turnaround has never happened before. The reason for this lies in the Fed's massive liquidity support, a precedent that history has never known. I should add that you have to consider the technological level of availability of exchanges, because the main problem is to open an account with a broker, and then you can buy and sell using your phone. And the statistics show that during the current S&P 500 growth, there was a massive influx of new private investors. Still, one period in history was different, and we know it as the Great Depression. At that time, the upward and downward trends would change every few months, and the fall and the growth were 20, 40, 60, or even 100%. It was the time of crazy volatility, and today it's probably the most dangerous threat to the stock market. The real economy is on its last legs, but markets simply ignore this fact. Whether Graham Stefan advises you to invest today, I'm gonna tell you at the end of the video. This is not a financial recommendation, and I never said that Apple and Tesla should open short positions immediately. It's about a stock split. So what does it mean? Typically, companies do two things with stocks. First, do an extra issuance of securities, or they do the splitting, aka fragmentation. The first one is very bad because by printing new stocks and putting them on the market, companies are reducing each of their investors' ownership. In contrast, the split is quite okay, because each investor preserves their share, and if you had 1% of the company before the split, then the share remains precisely 1%. What changes is the number of securities. For instance, Tesla will split its stock 5-for-1, that is 5 shares for each existing stock. The price will also be divided by 5, and if now Tesla gives $2,000 for one share, then after the split the price will go down to $400. Companies are doing this to raise more money from us. Apple's capitalization is over $2 trillion, but they think it's far beyond the limit, and it's not the first split in their history. Tesla's capitalization is $375 billion, and it's considered the most expensive car manufacturer globally. Both companies are confident that if one share's value is much lower, many more people will want to buy it. It's basic psychology, because I'm sure that it's quite expensive for the majority to get a $2,000 Tesla share, but $400 is a different thing. And in the end, no one is gonna remember the fact that now each share gives 5 times less ownership of their companies. However, Apple's experience has shown that after each split, the share value increases if recalculated by the previous price before the split. The Apple split was scheduled to take place on August 24th, and the Tesla split for August 28th. And while you're thinking about what to do with that information, I'm gonna ask you to subscribe to the channel and turn on the notifications. Because like Graham, I'm dreaming of 2 million followers on my channel too. Let's make it real together! Even though Graham Stefan may seem like a golden boy from YouTube who wants to teach everyone about investing, but in fact he gathers information carefully, and he adheres to the same strategy principles as Warren Buffett. So, despite my personal disbelief in further growth, well, I can't wrap my head around it. I'd like to end with some advice from Graham. He notes that after the end of one bear market, except for the Great Depression, when the S&P 500 index hits a new high, the price keeps growing. Odds say it could still fall, but no one can know for sure whether it happens. Therefore, it makes sense to focus on long-term investment and enter the market now if the position is not yet open. Even if it then falls, with the right choice of reliable companies. And here I'll remember Buffett again, who suggests choosing a business with a stable long-term profit rather than buy a specific stock by looking at its price. So even if the market does collapse, you'll have to wait as the owner of these securities for the profits to come. And if we are in the bullish market, then over the next few years, your investments will be making you happy, increasing in value day by day. Please share in the comments whether you're ready to buy shares at current prices, or are you sure of the correction and you're willing to wait for it. And that's it for today. Thanks for watching. It's the Coin Post channel. Subscribe and get enlightened.